Welcome to another educational video by my solo 401k Financial. Please like this video and subscribe for more videos like this. In today's presentation, we will compare the options to self-direct your retirement funds through a solo 401k as compared to an IRA LLC. Both options allow you to self-direct your funds and come with checkbook control, but there are important differences and similarities. Let's first review the account setup, checkbook, and titling. So with the solo 401k, you would have a bank account or brokerage account open in the name of the solo 401k. Whereas with the IRA LLC, the account is going to be titled, the bank account is going to be titled in the name of the LLC. With the solo 401k, it's going to come with checkbook control and wire control, that account, which is opened up in the name of the plan. So you don't need an LLC to get that type of control over your funds. Whereas with an IRA LLC, you need the separate LLC account to have that checkbook control, to have that wire control. Because your IRA account is going to be at the trust company where they're not going to give you that checkbook control or wire control. Now let's look at titling. So when you go to make an investment through your solo 401k funds, through your solo 401k, you make that investment in the name of the solo 401k. With an LLC, you're making the investment in the name of the LLC. So it's not in the name of the IRA. It's titled in the name of the LLC. So if you're buying a piece of real estate, it would be titled in the name of the LLC. Whereas with the solo 401k, it's titled in the name of the plan. With the solo 401k, you'll always have a separate EIN. And that's the EIN that'll be used to open up the bank account and the brokerage account. If you're making an alternative investment, like a private company investment, or if you're otherwise using an EIN, you'll use the EIN for the solo 401k. So for example, if you're making a private company investment and a K-1 is issued, it's issued under the EIN of the solo 401k. Now with the IRA LLC, the LLC will have its own EIN number, tax identification number. That'll be the EIN that's used to open up the bank account. Likewise, that'll be the EIN that's used for tax reporting. So if you're making an investment in an investment vehicle that's providing a K-1, the investment's titled in the name of the LLC, and when that K-1 is issued, it's issued under the EIN of the LLC. Now let's look at loans. With the solo 401k, the participant has the ability to borrow from her solo 401k up to 50% of the balance, not to exceed $50,000. And those proceeds, those funds, can be used for any purpose. Whereas with the IRA LLC, the IRA rules don't allow for loans from the IRA. And because the sole member of the LLC is the IRA, likewise, the account holder is going to be prohibited from borrowing from the funds that are in that LLC. It's effectively would be borrowing from an IRA, which is not allowed. So let's look at debt-financed investments in real estate. So if you're making a debt-financed investment in real estate, if you do that through the IRA LLC, you're effectively doing it through the IRA because the LLC is disregarded. And when you make a debt-financed investment of IRA funds in real estate, the income that's attributable to that investment is going to be subject to unrelated debt finance income tax, UDFI. Whereas if you were to make the same debt-financed investment in real estate through a solo 401k, there's an exception that generally applies to exclude the income that it's attributable to that investment that flows back to the solo 401k. So that's a very big difference. Now let's look at the income, expenses, and distributions, the money flow. So with the solo 401k, all the income is going to flow back to the solo 401k bank or brokerage account. With the IRA LLC, it's all flowing back to that LLC bank account and eventually to the self-directed IRA. In terms of expenses, those expenses with the solo 401k are likewise paid from that solo 401k account. So you're not using personal funds. With the IRA LLC, it's at the LLC level. So investment expenses are using LLC funds. If you're going to inject additional funds, it wouldn't be personal funds. It would have to flow from that IRA account. If you take a distribution, like let's say you need to satisfy a required minimum distribution, or you just are eligible to take a distribution and want to withdraw funds out of your solo 401k, those would be processed from the solo 401k account directly. Whereas with the IRA LLC, you can't take the funds directly from the LLC. It needs to flow back to the self-directed IRA account, and then distributions, including required minimum distributions, are processed at the IRA account level, not the LLC account. 1099-R reporting. So if you do end up taking a distribution from the solo 401k, the solo 401k provider issues the form 1099-R in both the name of the plan and your name as the account holder. Whereas with the IRA LLC, the form 1099-R is issued by the self-directed IRA custodian, and it's really issued for the IRA, not the LLC. Contributions, so you want to roll over money. Let's say you want to roll over money to the plan or make a contribution. So if you do so, those contributions, first of all, are going to be based off of your net income from self-employment activity. If you're rolling over money from a former employer plan or say a non-Roth IRA, all of those contributions are going to go into the solo 401k bank or brokerage account. So if it's a rollover, the check is made payable to the plan, deposited into the solo 401k account. If you're making a contribution, it goes into the solo 401k account. So with the IRA LLC, again, everything is happening at the IRA level in terms of contributions, in terms of distributions, in terms of rollovers. It's not going directly into the LLC bank account. So it's a two-step process. Debit cards. So the solo 401k can obtain a debit card, not a credit card, but a debit card from the bank account that's opened in the name of the plan. So this could be useful just for practical purposes if you're paying asset expenses. So if you have expenses, for example, related to your real estate investment. With the IRA LLC, again, you have a bank account opened up in the name of the LLC. So the debit card, if you obtain one, would be obtained at the LLC level. It could be used for paying LLC asset expenses. So with the solo 401k, the trustee is the only one that can make and approve investments. That's the person that has signing authority. With the IRA LLC, you are the manager. It might be your IRA funds invested in the LLC, but so the IRA is the member, you are the manager of the LLC. So you are the person that can make and approve investments. You are the person that has signing authority. So in order to open a solo 401k and continue with the solo 401k, self-employment, whether part-time, it could be a side job, or full-time, is required. Self-employment activity is not an eligibility requirement to have an IRA LLC, because really anyone who's an individual can open up a retirement account, an IRA account that is. It's not a company retirement plan, unlike the solo 401k, which is really for a business, in this case, a self-employed business. So creditor protection. Creditor protection is going to apply it's going to be based off of the state residence level. So states such as Texas, Florida. Generally, it's based off of the residence level or where the activity is. So it's, look at Texas, Florida, Arizona. Those states offer solo 401k plans full creditor protection, while other states like California and Ohio offer limited plans. Bankruptcy protection is going to apply both to solo 401k plans and IRAs, including the IRA-owned LLC. So here are some of the interesting differences between the solo 401k and IRA LLC. So with the solo 401k, you cannot transfer Roth IRA funds, whereas with the IRA LLC, you can transfer Roth funds to a Roth IRA and then invest in the LLC. A solo 401k can invest in life insurance, whereas an IRA LLC cannot invest in life insurance. With the solo 401k, unrelated business income tax would apply based on your investment to a solo 401k. But if you're making a debt-financed investments in real estate, it's generally not going to apply. UDFI, unrelated debt finance income tax, would generally not apply to a debt-financed real estate investment made with solo 401k funds. Whereas with an IRA LLC, there's no exception for UDFI. So you could have both UDFI and unrelated business income tax that could apply to your IRA LLC investment. So in conclusion, while both the solo 401k and IRA LLC are used for investing retirement funds and alternative investments, there are some very important differences to consider as you're choosing which option to go down, which path to go down. Thank you so much for listening to this presentation. For more information, contact us at business@mysolo401k.net or call us at 1-800-489-7571. Please like this video and subscribe for more videos like this.